Hi everyone, welcome to Value. So today we're going to talk about Corsair Gaming. This stock is negative 15%, so obviously something is wrong. This stock was kind of a darling during the start of COVID because everyone was stuck at home, so they were forced to build PCs, making their PCs nicer and nicer just so they had something to do at home. But now that everyone's, got a bit more freedom, they're able to go out, they're not building as many PCs. And now we've got a stock who kind of did really well during the pandemic, and now they're not doing too well. So it's kind of like the pandemic special was kind of over. So if you go to the website, you'll see they've actually released the results early, at least preliminary results anyway. They said they were going to release them around 5th of May, as you can see here, results on to be reported on 5th of May. But they thought they might just show you a slight snippet of what's to come, and I guess I don't know if you want to interpret it as something that's great or not. But in terms of revenue is expected to be around about $380 million, which is kind of like a backward step to where they were back in 2020. So it's not really a growth company if your revenues keep coming back to where they are. And they're expecting EBITDA of 14 to 15 million, and which is kind of not great because it means your margins are razor thin, and what's left, because we can't value you on a high multiple if your margins are terrible. And right now, we're probably our best guess is we can give you one-time sales because you're no longer a growth company, particularly in this current environment. As I say here, we're pleased that our preliminary Q1 revenue increased 23% over the fiscal year first quarter prior to sheltering at home. So that's the thing, like they kind of experienced a really good growth. And now they're saying, okay, we're actually going to compare with quarter one 2020 rather than 2021, which they said is the reason because people got many of their pandemic checks. And it's one of those things that go, then if you're only increasing growth from a prior 2020, then that's getting really desperate, and it's kind of showing that, hey, the company's really not growing as much as people thought, and hence why the stocks just dropped so much recently. Like even like from basically their peak was 2021 in February, or if we go to like 2020, their peak was so as you can see, the peak got up to like $51 in 2020. And in at start of 2021, it was in the 40s, 45, 46. But it's never been better. It's just the stock has just continued to sink lower and lower and lower and lower. So that's basically the situation, and I don't think the situation is going to get too much better because it was a stock that had a lot of demand during COVID. It made some really good profits, but now it's kind of like they've let the air out of the balloon, and it's no longer too special, and hence why we have a negative, the price is coming down. So the biggest question is the stock worth getting into? Like it's really difficult with these type of stocks. Like anything that comes down, your kind of mindset is there a bargain here? Is there a bargain? And the thing is, there kind of might be a bargain, but it's not clear, and I wouldn't say there was a bargain. Like for me personally, like, I'm looking at this and going, like I looked at the stock a really long time ago, back in 2020, and I saw some really good growth rates. So it's kind of like horrible to see it just decay like this into this situation where the growth rates are at 23% based on the year 2020. So yeah, like there's not a lot of optimism anyway in the situation. I'd say the stock has room to come down a bit more because it's not a great situation where they're earning razor thin margins. to earn 14 to 15 million EBITDA. So, if you don't know what EBITDA, that's earning before interest, tax, and depreciation. And so basically their net profit's going to be so little in comparison to what they've basically done in revenues. So yeah, like when a company's only earning a few percent margins, when it translates to the net profit, that's not a company with a strong moat. That's a company that's got a lot of competition, and it's also the growth. Their sales aren't as great as they used to be. Like back in 2021, they had really really good quarters. They had 400, 500 million type of quarters, and now we're seeing them come back to like 380. So I don't think things are too great. Did they say? Let's see. So as I say, we were not expecting to show growth over the most recent Q1 2021 since the quarter contained surplus checks and pent-up demand due to product shortages. So they're saying that's why they did not compare with 2021. Having said that, our Q1 2022 revenue was lower than we expected, mainly due to a short-term slowdown in consumer spending in Europe. So yeah, I don't know, I'm not too sure I buy that reason entirely. I think it is because people want to spend on things other than stuff that they use inside, because they want to go out, they want to travel, they want to spend money that they could not spend in the last 2 years. So they're not spending it on upgrading their PCs because they're probably all done that in a sense. As is now becoming generally apparent, inflation is higher than expected, which probably cuts into their margins because they can't charge too much higher or else people buy less. And it also means since they're not charging higher, their margins are going to be much more smaller. And inflation is higher than expected, and the Russia and Ukraine conflict has put a constraint on consumer confidence. So again, I'm not too sure about that one, but I guess I'll leave it up to your interpretation. Perhaps they could have a valid point, or maybe not, or maybe they just need a reason to say why they're not selling as much. We are encouraged by the most recent reports of GPU pricing falling and availability coming back to normal. And as we outlined in our Investor Day presentation, we expect that to result in a surge of self-built gaming PC activity in the second half of the year. So maybe they do expect some better results in the second half of the year. Then that kind of gives you some confidence that you might potentially buy into the stock if you think there's something good going on. But at this current situation, you're basically going to be paying, the valuation already assumes it in a sense that you're paying one-time sales. So one-time sales is more or less the current valuation. But again, a company with razor thin margins, small, not really a great moat. Even if you got it at this price, the biggest question is what's your real reward, because it's not going to fly too much higher than the current situation. So my in terms of how I would look at this, I would go if the stock was to fall a bit more, quite a bit more, then potentially I'd see it as something attractive. But currently the margins are too razor thin to really kind of incentivize you. Like it would be like a flip. You would buy it just to sell it at the higher pricing, just in case it ever fell back down. This isn't the kind of company that kind of inspires a lot of confidence, because people aren't generally just buying more and more. Like that was kind of the situation that you kind of saw within 2020. People were buying a lot in 2021, and the stock sales were doing really well. And that's probably the best the company's going to do for quite a long time, those 2021 results. And basically during that time, the stock never really went like over $50 in 2021. So that's the biggest question. If in 2021 it didn't go that much higher, then that's basically your upside. and I'm not too sure we're going to see 2021 type results for a while longer. So even if you bought today, your upsides, possibly, who knows, 20-30% over a longer term, if things do recover. But I'm not going to be too optimistic. I usually try to be a bit more optimistic of these situations, but I would like to look at the reality, and the reality is the growth compared, they've not really grown since really too much just since 2020. They've gone a step back compared to 2021, and the biggest question is, like, where's the extra demand going to come from to kind of increase their business? Because unless they start pivoting to a different area, which can keep growing the company, then currently, it's not an optimistic outlook. But that's just my view based on what's available right now. Maybe they might give a really, really good guidance for the upcoming quarters and when they announce on May the 5th. And perhaps that does change the value, but currently I guess the market itself doesn't feel too confident. But let me know what your thoughts are, and if this is a stock that you're in or would like to get into. Until then, good luck investing, everyone.